Folks, guess what we got? We got a question for you. What is the automated velocity solution? You guys already know who this is, right? This is the velocity channel. But a lot of you have been asking questions, and questions are good because many times questions are the answer. And we're going to be getting to some of your questions right now, okay? With Richard Schaefer, the guy who has seen it. I want to say seen it all, because that's 30 years is a long time, man, to be in the
Oh,
financial space.
that
Okay.
just hurts to hear that. That just hurts for you to say that, brother.
But you've known about this method of velocity banking. You know about the struggles that some people go through
Mhm.
because they're not able to pay their bills. They're not able to pay their debts. They're not able to do it. But you've also seen people that who weren't able that are now able because of that solution that
Mhm.
we're going to be getting into and diving into just a little bit today. So, Richard, man, thank you so much for coming back onto the program, the Velocity Channel, and with your expertise. And these people already know, that you're the big fish, right? And I'm just the one who's trying to learn. I was actually taking some notes from you earlier before the video, and obviously the crowd, the audience needs what you have, needs that knowledge. And so, man, is there anything you want to say before we get right into it?
Honestly, just I know this sounds like kind of a what people are supposed to say, but it's an honor to be on the channel because number one, obviously, our relationship we've been able to develop with you over just even this fairly short period of time has been extraordinary. I think it's one of the reasons we are in such alignment, CJ. But I just want to acknowledge what you're doing. The reality is, there's a big problem in America, for the world for that matter, but in America, and we need a lot more people bringing attention to the things that we're talking about. And we feel privileged that we're able to connect with you because you've got such a great audience. You've got some extraordinary, very, very loyal followers that trust you. And let's be honest, trust is not an easy thing to gain. It's an easy thing to lose, but it is a very, very difficult thing to gain. And you've done that successfully, and it says a lot about you and your character. And that's one of the things we want to make sure we align with like-minded people, but also we want to make a big difference. And you have to have like-minded people to do that. So we're very pleased and privileged, honestly, to be a part of it, and just welcome the opportunity to bring more attention to these things and help create avenues and solutions for people to make a real difference in their own lives.
Awesome, man. Awesome. Well, look, let's get right into it, Richard. All right. There's some questions that I know
All right,
people are
I'm
are
ready.
are, are asking, right? They're asking these questions, man, and I'm gonna get into one of them. Do you feel like the savings account, right? That interest rate that they have now, do you think that it is barely keeping up with inflation? Now, I know that sounds funny, right? I know the crowd's going to be like, "What are you talking about? Interest rate, man? They got 0.005, and there's actually some banks now have 5%, right?
Mhm.
5.25%. But the question is, right? Is it barely keeping up with inflation, right?
Well,
And not only that, but why would you promote a product that is barely, if it is, right, barely keeping up with inflation?
Well, there's a lot to unpack there, but I'll tell you my first couple feelings on that. First of all, I hate to be the Debbie Downer of the day, but if you're getting 3, 4, I don't care if you're getting 5%, you're not keeping up with inflation. Now, forget about all the stuff you hear and how they strip out all this and that and the other to tell you what this artificial number is that, oh, inflation's really only 2.5 or 3%. Trust us, it's really only that. Folks, if you turned off the TV for a week, you didn't log on to the internet, and you set your phone down for a week, would your experience as a consumer actually be that inflation only feels like it's up 3% from last year or the year before? No, because you spend $100 on 3 bags of groceries when you could have got twice as much just a couple of years ago. That's real inflation. So all the voodoo math that's done, unfortunately, hate to be the bearer of the bad news here, so to speak, in most cases, that number is, what about rent? What about cost of living on a daily basis there? Those are very high. So the reality is two things. One, ultimately, you could probably be earning 4, 5, 6, 8%, and ultimately not truly be being keeping up with the actual cost inflation, et cetera. But that being said, it's certainly better than earning nothing because you're hedging against the impacts of inflation, and therefore you're mitigating the negative effects on you. But the other answer to that, though, is 83% of all deposits in banks are actually in non-interest bearing accounts. Just think about that for a second. More than 8 out of 10 of every dollar is not in interest bearing accounts. Now, part of that 2, 3, 4 years ago was because you're right, interest rates were 0.25%, right? Well, yeah, right now rates are higher, 3, 3.5, 4, maybe even 4.5, 5% in some, rare cases. But the reality is, though, you have to make sure it's not what something costs you, it's what it makes sure what it saves you. And sometimes you're just saving from the loss. You're taking, let's say inflation, just for argument's sake, is theoretically more like 5, 6, 7% if you aggregate everything. Well, you're either at 100% loss on that 6 or 7%, or you're at a 2 or 3% loss. You're mitigating your loss. So, and the reason that most of those accounts obviously are not paying interest is because they are what? In checking accounts. And why is that? Forget about what savings accounts are paying or not paying. It's because it's the golden rule. And again, it's not the one we learned in church, right? It's he who has the gold makes the rules. And there's a reason that banks and financial institutions in general are the biggest buildings in the biggest cities and the biggest states, countries anywhere in the world. They have the money and they know what to do with it. Now, that's not a crime, right? We're not vilifying the banks, but imitations, agreements, for or flattery. So what are they doing that we can do, CJ? What kind of solution can they provide? So it's all about leveraging those dollars, putting them to work. So banks, when most of the money they have that they're using, that they're paying you for the privilege to use based on a monthly fee and all these other things, they're putting to work. So yes, inflation is a big issue. Yes, it's worse than most people truly realize, or fundamentally they feel it and they recognize it, but they're told something else. Independent of that whole argument, the reality is you've got to start leveraging your money more efficiently, more effectively, and banking like a bank. Do what banks do. How do we deploy the systems and strategies that they've deployed for decades to their advantage instead of the bank? And the other interesting example for that, CJ, is probably most people that are watching this have engaged in a game or a sport of some sort. I don't care if it's Monopoly. Now, I'll ask you, what's the likelihood you could be even competitive, much less win at a sport or a game if you don't even know the rules?
Not likely. Not
Impossible,
likely.
probably, right?
Right. That's
So
right.
that's the problem, is we're all forced to play, folks, what really amounts to be the money game. The problem is we don't know the rules. And worse, some of the rules we think we do know actually don't work the way that we're led to believe they work. So it talked about an entire financial system that really against us. It certainly is, CJ. So that would be my first little entree answer to that question. And of course, it's a deeper subject, but just those are the general points just to take away. So it is important. Yes, we are losing some ground, but we can't afford to lose all of it. We've got to mitigate as much of the impact as possible, and then subsequently incorporate other strategies and systems that can help us maximize money in other ways too.
I know that one of the things that people are talking about now is the interest rates on these
Yeah.
mortgages and the interest rates on the car loans, the interest rates. And they're pretty concerned, Richard.
Mm-hmm.
I mean, they're concerned about the interest rates. And one thing I've noticed with those that actually know about the automated velocity solution is that they're not as concerned about interest rates as they were before, right?
Right. Okay.
I mean, if you don't have a plan, of course you're going to be scared when a gorilla walks through the jungle and you don't have a plan on how to
No, I'm pretty
survive.
sure I'm
During,
always going to be scared if there's a gorilla walking through the
I mean,
jungle. I don't think there's any way around that
right? Exactly. But I mean, the interest rates, right? And these people are like, oh, we got 12% here, we got 8% here on the
one.
house,
Mm-hmm.
and oh, what are we going to do, right? Is that something that people are locked into? Like, are they kind of
Galvanized.
banished? Are they
Mm-hmm.
captive, right? for that interest rate? You know, are they the only ones that get to look at this and are like, well, wait a minute, you know, we got an 8% mortgage here. I guess that's the best that this company can do, and I guess I'll just go ahead and pay it. Are they
Yep.
locked into that mentality, or is there
Well, listen, let's
somewhere they can?
let's piggyback for a second on what we just talked about, right? And listen, this just being straight here. There's no angle. We're not trying to hype and rah-rah anything. The truth of the matter is, hey, we don't make the rules, but I guess like the old tongue-in-cheek expression goes, don't hate the player, hate the game. Okay, well, the reality is we cannot like the way the rules are set up, but that doesn't mean that we can't not only survive, but thrive by playing the game the right way and using the rules to our advantage. So one of the most important things I talk about this, and man, I'll tell you, forget about even just the obvious benefits of the things that many of us have learned or heard and what I was very, very fortunate to have been introduced to in middle school, which was just the fundamental, the banking rule of 72, right? The time value of money, the compounding effect of money, right? That completely was a paradigm shift for me.